I think that the global economy has seen a bit of a slowdown over the last couple of months. We certainly have a lot of potential roadblocks in there, which both relates to China Evergrande-related risk. We have the potential risk of a U.S. government shutdown. We have central banks that are certainly past the peak in terms of stimulus, so enough for us to be watching here as we continue to be kind of bullish on markets, being long not only equities, but also financials, energy, Japan, and the like.
Yeah, we look globally around the world. First off, in Europe, we've got an election, which we're going to get more, by the way, with our colleague Jeff Cutmore in Berlin in a second. But, you know, we're trying to understand here in the States what this election may mean. It's unclear even who's going to be leading a coalition government. But yet the German market is up about 1% right now. What is happening in Germany, and what is your take on Europe macro?
So first of all, when we look at the German election, we'd say that market participants certainly don't like uncertainty that comes around election. But I think the interesting thing is that this coalition, we're going to get three-way, which is either going to be led by CDU, CSU in kind of this Jamaica coalition, or turning the other way towards the SPD, which were kind of the winner of this election. In a three-way coalition with the so-called traffic light system here. I think either way, we're going to have the Greens and the Liberals being somewhat in charge of setting that agenda. And there's not going to be that big of a difference between them. And I don't think that the political situation in Germany will change that much, even if we're going to get a new chancellor. So I think some degree of continuity and predictability is something that the markets like. And I think that's probably also why we see the markets in Germany being up. And also why, frankly speaking, global investors should not be too concerned about the outcome in Germany.
Yeah, and Mark, looking at your latest note, you just referenced Japan. The Japanese market has been hot. The Nikkei 225, a lot of people kind of ignore it. You say do not. You think Japan, when you look around the world, may, on a macro level, be the best place to invest right now. Why? What is it about Japan that looks so attractive?
So first of all, we certainly have an election coming up where, unlike in Germany, we are likely to see an extraordinary amount of fiscal stimulus coming out on the back of that. That's basically been the catalyst to what we think is a great investment story in Japan, which links up to several pillars. So first of all, Japan has been a laggard in terms of bringing out vaccinations. So they were late to the game. But now they've picked up and they've even overtaken the US with more than 64% of the population being vaccinated. Then we're going to see the state of emergency ending in September, which means that a continuous reopening and reacceleration of the Japanese economy leads Japanese companies to increase their earnings. Again, one of the most strong markets for earnings upgrades. We have a dollar-yen below 110, which means for the exporters, which is a big part of the market, is highly supportive. And then we've had this underperformance, which means that it's trailing on a price-earnings ratio, global equities by 14%. So significant catch-up potential in our view when we look at Japan.